Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, August 19th. It is 6:10 as I'm starting the video. As always, please run the player at 1.25x to maximize your efficiency. Okay, guys, we got some follow-up selling to yesterday's selling into the close. Taking a quick look at futures, I want to tell you that the numbers that I have here that I'll share with you were as of about 5:30 this morning. We're in the midst of a bounce. So when I got up this morning, we were down about 1% on large caps, about 0.8% on NASDAQ. Small caps were down 2%, oil's down 3%, copper's down 3%. And what I'd like you to do, and this is something that I do almost every day, especially on something that I'm going to be actively trading, on your platform, mark the pre-market low. You'll see that. Why? Because very often, especially when you've got a sizable, decent pre-market move, and then they bounce it in the pre-market, what's going to happen, or what often happens, is during the regular session, they will come back and revalidate that point. So even though we may be bouncing now, and maybe, quote, things won't look that bad by 9:30 this morning when the regular session opens, have that pre-market low identified on your charts, especially if you are planning to actively trade it. And also, if we have that pre-market low, if we have a nice pre-market bounce, you'll have to evaluate, if you have some longs that you got trapped in or had from yesterday, and we get a pre-market bounce, or they try to fill the gap that's overhead, that would be an opportunity that if you wanted to get out of your longs, that would be the place to do it, because then they'll go back down and revalidate that low. So any kind of pre-market bounce or opening bounce this morning, shortly after the open, that would be a place to take off some of your long risk if you want to do that. Okay, let's quickly go on to macro this morning. We've got jobless claims at 8:30. We've got a Philly Fed number coming out. We've got a 30-year TIPS auction at 1 p.m. and we've got natural gas inventories as well. So a lot to go over here, so I'm going to move it along. 10-year treasuries. There was a strong 20-year bond auction yesterday, but this morning you'll see yields fall and TLT rise, just because that's what happens on a risk-off move, that people will pile into safety. So I expect this to come down, and we're going to just have to see as we move along. Do we come back down here to these lows, or do we stabilize at some level above? Now, I took a pre-market look at TLT, and we're going to pop above 150. When I looked pre-market, they were trading around 151. So it's going to be right in the middle of this range. So we've got a couple of good reference levels to work from here at 151. A breakout above 152 would be just that, a breakout, and your target would be 155. If things stabilize and yields start to rise again, then you've got this nice support level at 150, that if TLT fell below, then you'd have an objective level to short against for a move back down to the 200, down at 146. And remember, that worked pretty well for us over here, where some of us got short in this area here, and then we gotta move down to the 200. That was a pretty decent little trade. But regardless of whether you're going to trade bonds or not, it's a good idea to keep these levels in mind, just so you kind of know what's going on in relation, to the equities. So if TLT is still rising, you get a breakout here, that's going to be, all things being equal, further indication that there's the risk off move, defensive nature of the market is still intact. Now, just quickly looking at the dollar, you're probably going to see a jump in the dollar today because, again, that's what happens when there's a lot of selling, flight to safety. So the key level to watch here is 93.5 for a breakout. Now, I'm going to revisit the oscillators because now they're coming back into focus again. You can see that the New York oscillator is all the way down at minus 50. And remember, this is not reflective of anything that is transpiring today. This is an end of day reading. So if there's a lot of selling today, just like what we're seeing now, another 1.5%, 2%, whatever they plan to do with it, you're probably going to see this move down beyond minus 60. If we're minus 50 right now, by the end of today, if there's any decent amount of selling, you're going to move it down, minus 60, minus 70. Now, does that mean it's over, that we're just going to bounce right here? Well, not necessarily. All I'm saying is, and please take this to heart, if we get down, minus 70, minus 80, minus 90, you don't want to be entering new shorts, right? Because you'd be shorting into the hole, right at the time where the thing is going to potentially bounce. So you don't want to, the time for getting short was back here if you wanted to do that. Now, we're not going to know, today where we're at. So if you do end up shorting anything, keep it very tactical. You don't need to go out to, November, right? I would stay tactical, wait for a bounce up to a resistance level, then put your short on. So anyhow, this is starting to move down into the extended oversold range. So be aware of that. Now, I was surprised the NASDAQ, well, we're at minus 44. The other one was minus 50. So same kind of idea. I did note that the NASDAQ wasn't down as much as SPY and small caps. So we're just going to have to kind of play it by ear on the oscillators. Just know where we're at right now, which is minus 44. If there's some dramatic, follow-up selling today, that's going to push this number down into the minus 60, minus 70 range. And remember, last time we bounced at minus 78. And if you go back, this table goes back, 3 or 4 years. You can see that minus 70, minus 60 were good areas for reversal points. In some of the outlier cases, like back in March, minus 90, COVID low, minus 124, and you had some occurrences, remember, in that 2018 fall sell-off there were some pretty low readings back here as well. So keep that in mind. I was surprised yesterday that our percent above 50 really didn't move that much. It was like minus 45 and it moved down to minus 40. So we know that breadth has not been very good lately. And so seeing that move back down on selling is not all that surprising. Keep an eye on the VIX today. We had pointed this out last Friday that we were down at support, and once you get to support, there's only really one way to go, and that's back up. We broke this trend line. This was Monday's action. We had a move up. Then Tuesday, remember, that's when we had a pretty decent morning sell-off, and then they bought it all up in the afternoon. So we had a high up here around 19.5, and then they brought it down in the afternoon. But yesterday was just the opposite. We had a more or less a positive open, and then they sold it off into the close. So on volatility on the VIX, we closed at the highs around 21.5. The next overhead level is 25, and support is down here. We can just call that 20. If you keep the VIX in focus during the day and simply monitor, is it rising or is it falling? And if you can do that, I think you'll have a good read on what's going on and what may, transpire in the time going forward. Very tough to be getting longs, unless you're simply trying to pick a bottom somewhere with VIX, 23, 24, 25. That means things are still heading south and volatility is rising. Because then you break out at 25, then you're looking at, 27 and then 30. That's a whole new ball game. So keep VIX in the crosshairs. And if you see a break back below 20, that would be your bullish move. If volatility starts to come back in and then drop back below 20. Remember, we saw that here in the last episode, and that was really like a month ago, not that long ago. We had a spike up to 25, and then the very next day, they brought it down below 20. So these spikes don't last very long. I mean, if you look back, you get one or two bars, and then they start bringing it back. So keep an eye on the VIX. I think 20 is a really good toggle point to keep a reference on. Equal weight SPY, I think you can pretty much figure that there's going to be a 50 EMA test here at 151.60. That would bring us back into this trading range. And remember what we always say, once you leave a trading range, you don't want to come back into it. So we're going to have to watch that very, very carefully, because if it's a big if you lose the 50, then I would almost guarantee you that you're going to come back down into the 148, 146 range to test these lows back here. So the 50 EMA is going to be really important on all of our charts today and in the days to come. SPY daily, we've got the 50 EMA at 433.5, and in the pre-market at about 5:30, this was trading 434. So, price was already testing the 50 pre-market, actually undercutting it a little bit. And the bounce you're probably seeing is, an initial reaction off of that 50 in the pre-market, getting a little bounce. So I would key off the 50 today at that 433.65. And keep in mind, the lower edge of the channel is down here at 430. That's going to be our next big reference level. And you can see that back in July, we had a tag of that. Actually, that's way down here at 422. Beg your pardon. If this 430 breaks, then your next target would be this prior low back here at 422. So I doubt that would happen today, but good to have the levels marked on your chart. So here's what we're looking at. Just key off the 50 today, that 433.60 area, and see how price handles that. Now I want to jump to the 2-hour, because here it kind of shows we're going to drop out of the 2-hour channel today. This is where we were pre-market. Remember, if you've got your chart set up the same way as I do, the 200 EMA on the 2-hour chart is the same thing as the 50 EMA on the daily chart. So this 433 area is going to be really key. Notice that we've got some prior lows back here at 431. And then if you lose that, you're down here. You're down here in the 428s and 425s. So that would be, getting down towards these prior lows. We've got a larger volume over price support bar here at 425. So I think these levels are going to be come into view and be very helpful today, especially if you're trying to actively trade it. And don't forget, depending on where we open, there's going to be a big gap above that will eventually be filled. Now, they might do that today, come down here pre-market, bounce a little bit, and then flash up to fill that upper gap, and then roll over again. Always be aware of your gaps when the bell rings. Know where your upper gap is, and then if you see a move into that gap, you can decide if you want to try and trade it or not trade it. I think the thing for today, your default should be bearish, not bullish. We've got a series of lower highs and lower lows. So if you were to get that gap fill, the only thing, if you're trying to trade it short term, the only thing that should get you bullish is if they fill the gap and keep on going, right? Take out yesterday's closing low, break above that, then you would have a new reference line to shoot against on the long side, if that makes sense. Let's move on to the Qs. Here's the daily chart. We stalled at the top. We started seeing some corrective activity. Now we're on the low side of the midpoint line of this big channel that we've been carving out over the recent weeks. Notice where the 50 is. It's right here at 357.50, and when I got up this morning, we were trading like 358, 359. So I think this level here, 357.50, is going to be really important. I wouldn't be surprised if we get an initial bounce off that 50 line. But below 357.50, then you got 352.50, and then you've got the bottom side of the channel here at 345. Here's the blow up on the 2 hour. Here's the 50 EMA on the daily coming in. There's a little shelf here at 358, and that's where price had stopped in the pre-market. So price is going to come right in here to this 358, 357.50 area, and it's going to test that. And as long as that holds, that'll be a good line as a reference point. And then if it breaks below, then you're looking at 354 and 352. So what I like to do on days like this, or potentially like this, is find a landmark on the chart that you can use as a beacon. And I think today it's simply the 50. Do we hold the 50 or do we lose the 50? Because of course that's going to make all the difference in the days ahead. If you come down here and somehow we close below the 50, then you've got to stay bearish. You just have to stay bearish if you're below the 50 and assume that you're going to come down here and test the bottom side of the channel like we did here. If I went back in the chart, you'd find other locations where that happened here. And so if we lose the 50 today or in the days ahead, I think you got a plan on testing the low side of the channel in the coming days. So mark that point on your chart. 358, 357.50, and then you've got yesterday's closing low as your upper reference point, right, for any potential gap fill higher in morning trade. IWM is not looking so hot. We were actually trading pre-market down here right about the 200. Let me see. I got some notes here. Yeah, trading at 210, right at the 200, which is below this $23 wide consolidation. So that's going to be a very, very key level on IWM. The 200 at the 200 EMA at 210. And, if you were to envision this area here as a bear flag, you've got a move from top to bottom. Let's just do this. Say 234 to 212. Let's call that, it's $23. So 23 from this point here is going to bring you down to 200. So that would be the measured move of this bear flag, puts us down at 200 on IWM if this structure plays out. And the only way that happens is if you lose the 200. And so if you wanted to take a trade, the 200 would be a beautiful place to shoot against. I mean, it's a logical place. It's a very objective place. Below, I'm going to stay bearishly positioned below the 200, and anything above the 200, I just take it off. So the 200 is going to be important to hold, and then this 211, 212 area will be important on any kind of recapture move to come back up and go higher. And here's the 2-hour chart. It's almost off the scale here. The 200 will come in right here at this 210 level. So come down here, test this prior low, and then see if it can hold. All right, moving on to Facebook. I marked the 50 EMA on the daily right here, and that's where price was trading, 350. So I think that's your toggle point today. Your pivot point is the 50 on the daily chart. You're going to start with a gap above, and then you've got this prior low at 348, which was also the midpoint of, the low side of this consolidation range back here. So 348 is going to be a really important place to hold if once the 50 is penetrated. You really want to hold 348, or else you're looking at 344 and 340 and right on down the line. So I would key off those levels. You've got on the upside a recapture at 352, and then getting back up to yesterday's closing low right around 356 would be your gap fill. Apple pre-market was trading right around 144, so the gap will extend up to yesterday's close around 146.50. You get below 144, you're going to come back to test these prior lows at 141.50. So I think this 144, where these prior lows were, is going to be your pivot for today. Tesla had a really nice day yesterday, moving up here to the 690 level and flagging, but now pre-market it was trading around 670. So that's going to be a pivot area with a big gap above. If it can get back above 690 and move higher, that would avert the danger. Otherwise, you're probably going to come back in here and test this prior low at 650. But for right now, it was trading around 670. So I think that's your active pivot. Microsoft had pretty much held the line over the last couple of days, breaking out above this 289 level and coming back to test it, but then staying above. Now this morning we're back. Pre-market it was trading around 287.50, 288 area. So I think you're going to have a support layer kind of between this 287.50 and this 286 level. There's going to be a shelf there, and then there's going to be a shelf at 284 where we saw all this support action back here. Anything below 284, you're going to come in and fill this gap and work down from there. But first things first, it's sitting right here, 287.50. I think that's your pivot with a gap back up to 290.5 where it closed last night. Amazon, I've switched to the daily chart. This was the breakout. We were all planning on 4,000. Stock had different ideas, had a back test bounce, then let go on earnings, and really has not looked back. And now We're back in the big trading range. Here's the 200. We lost that yesterday. So that's a great pivot point in and of itself, 32.50. Nothing good is going to happen until 32.50 is recaptured. So in the pre-market, we were down at 31.75. If you saw a kickback rally that brought price into 32.50 and you want to just take a shot on the short side against both this resistance layer and the 200, that would be the place to do it, because I think we've got enough evidence to point to the most likely scenario being to come down here and test the bottom of the box at 29.50, where we had all these touches in the past, which in fact created the big trading range. So break outside the range, fake breakout, move back into the range, target becomes the bottom of the box. Google, not much damage pre-market. I had price trading around 2,700. I think you can pivot off the bottom of the box right here at 26.85. Below that, you're going to get a gap fill. Above that, kind of saves things and keeps price in that trading range for a potential bounce back up to this 27.15 area. Netflix. I didn't see a lot going on pre-market, so that's good. Basically, consolidating and forming this base here between 522.50 and 508. So if for some reason they go higher, you can be long against 522.50. But, given there's a decent amount of selling out there, you could also be short against 522.50 as well and look for a move back into 515 and possibly 508. And then lastly, this is the real troubling one. Been talking about it over the last couple of days, just as a risk on, risk off sentiment indicator. Semiconductors. We had broken out above 258 and then taken out this 262 level. Things were looking rosy back here, but it not only gave it all back, but has moved back into this $35 trading range. And now pre-market was trading down around 248. So not looking that great. We've already lost the 50 here in green. So I think your default bias has to be to the short side and figure we're going to come back in here, maybe test this 240 low that we had here at the midpoint of this box, and then notice where the 200 comes in around 233. That would be your next level of support. And if it can't hold the 200, then back here to this 223, 222 and a half area. So a lot going on. Keep your wits about you today. Keep in mind where those oscillators are or where they likely will be. We're not there yet, but approaching oversold on the New York and the NASDAQ oscillators. You do not want to be, neck deep in shorts when that thing gets to minus 80, minus 90. We saw what happened before. We got that snapback, and then it was basically that V-shaped recovery that was right here. corresponding spot on the charts about a month ago. So be cognizant of that. Be very tactical in whatever shorts that you have, and be cognizant of both the gaps in the morning trade and also bigger picture, where is price at in relation to the 50 EMA. And you can do that on your your individual stocks as well. Nothing good happens below the 50, generally speaking. That's a good rule of thumb. If you're coming down, once you lose the 8 and the 20, you've got to be tactically defensive. Once you lose the 50, then you're tactically outright bearish at that point. So keep those levels in mind. Once the charts update this morning, I'll take a quick look and try and shoot you out a note mid-morning to kind of give you a feel for the land after some of the initial opening trades have kind of established a range. Do we run up really fast, or do we roll over, or just kind of steady Eddie? I also want to make a point that commodities are really getting hit hard, not only with the rising dollar, but also growth fears in China, blah, blah, blah. You want to see oil stabilize. That's important for SPY. If the oil complex is falling apart, it'll be tough for SPY to stabilize itself and go higher. There's a strong correlation between SPY and oil. So even if you don't trade it, you want to keep an eye on that from the standpoint of, has it stabilized? Is it going up? Or does it continue to fall apart? So I hope you found the analysis helpful. If you're new to the channel, I know there's a lot there to digest, but if you key off the levels that I point out, I think you'll have an easier time of it during the trading day. Please hit the subscribe button and the alarm bell. We'd be glad to have you. And then jump over the show notes. There's a link to the blog site where you can drop in your email address and get all my content morning, noon, and night. You won't have to go hunting for it. And longtime subscribers, thank you so much. I'm glad you're here with me. I appreciate it a lot, and also appreciate you forwarding my link along to your trading circles, friends and family that are interested in markets. I'd like to think these levels would help them out too. So, in my parting remark to you is keep your composure in the face of selling. Not easy to do. And if you get flustered, if you feel yourself going to tilt, just step away. Whether that stepping away is 5 minutes or however long it takes for you to take a deep breath, to get a drink, to recompose yourself. And when you come back to the desk, your first question is always, where's the next level? And if you boil it down to levels, recapturing levels from below is bullish, losing levels from above is bearish, and those simple principles will keep you on the right side of the trade. So I hope that helps. And if you get stuck, you're always welcome to shoot me an email. I'll do the best I can to help you make sense of it. So good luck this morning. This has been Chris Buss with Traders Profit Compass. Have a good trading day. Talk to you next time.